Well, in the words of Shakespeare, much ado about nothing. That statement even applies to inflation, but the backup in bond yields is important, especially to lofty market valuations. But our next guest isn't concerned this will last. Why? Well, Paul Ashworth joins us now. He's the Chief Investment Officer at Cameron Harrison and joins us live via Skype from Melbourne. Cameron, good to see you there. Hope you're having a good morning so far. The markets have got a little bit twitchy about this backing up of the US curve that's going to flow through to Australia as well. You're not concerned at this point yet. Why?
Well, we're not concerned in the medium to long run, especially as it then feeds into equity valuations. But yes, markets are twitchy in terms of the short run, and we do expect over the course of the next 12 to 18 months some normalisation to pre-COVID levels of inflation. And as we can see, the markets will react to that.
Okay.
But on a medium to long-term basis, we think there is less to be concerned about.
So, when do you, there at Cameron Harrison, Paul, think that we will see a return to inflation?
Look, I think the key factor is, and you spoke about it in introducing this, it really does depend on, the concerted effort of fiscal policy and fiscal stimulus to, buck the secular stagnation, trend that's been there for the last, 25 to 30 years, and we've seen that in terms of bond markets over that period, and equities have been a beneficiary of that. If there is that concerted push, and there's no one better qualified than Secretary of Treasury, ex-President of the Federal Reserve, Janet Yellen, to understand that risk. Inflation, might overshoot, and those inflationary expectations, might become established. We think it's a very big ask, to buck those secular stagnation trends of the last 25 years. You mentioned, underemployment. Roy Morgan here, released, their own survey data on that. Today, they've got an underemployment rate of 21% in Australia. We've got 103,000 people in Australia that are reported as employed, but they haven't worked an hour. So to see those wages pressures over the medium to long run really build up, we think it's a big hurdle. It's not an insurmountable hurdle, but Japan shows you can throw a lot of money at it from a fiscal stimulus perspective, and it go nowhere.
And Paul, one thing we're thinking about a lot at Firetrail is the shorter term inflationary impacts of things like rising oil prices, rising pulp prices, etc.,
Sure.
and how that plays out. I totally agree. I think you'll see inflationary pressures start to normalise. What's your sort of view in the shorter term with some of these inflationary pressures coming through supply chains?
Look, they're going to be there. Do we think that the globalisation, some of the effects that we're seeing, particularly in terms of Australia and China, there are some effects there. We see, classic one is, iron ore and Vale. They seem to be, Brazil, going from bad to worse in terms of COVID data. There's those supply chain issues. But as markets and those longer term bond markets really start to work through it, you mentioned in terms of the US stimulus package. When we look at the back of the envelope on all of that, in terms of the amount of stimulus that it's actually going to carry through to economic growth this year, we would hardly change our figures in terms of that. We don't think it has a significant multiplier effect. We think a lot of it goes into savings, as it did last year, and a little less than half of that, of that stimulus, about 800 million of it, is going to be in next year and over the course of the next decade. So the market will take a little bit of time, to work through what that all means. But we don't think we don't think at this point in time it's as material a risk. Perhaps as markets are focusing on the short term, that will dissipate.
Okay, so then the natural question is, Paul, where are you investing right now?
Okay, so we can see, obviously, in terms of, I think, what people generally call, those longer duration, growth investments. We certainly don't think, the shift is, from growth to defensives, Nadine. It's really to those enterprises, those firms, that are well leveraged to economic growth, and the improvement in the economic cycle. So it is those good quality, as Charlie said before, modestly geared industrial enterprises, that have been strong on their own productivity growth. But it's the cyclical businesses with good operating leverage upside.
All right, Paul Ashworth, Cameron Harrison, CIO. Always a pleasure. Thank you so much.
Thanks, guys.
Take
Nice
care.
to be with you.
So much ado about nothing, inflation.